Gordon, let's just talk quickly about those governance issues. How material are they to you?
We think they're pretty material. I mean, the acquisition of Solar City, as well as some of the targets that have been put out and the missed targets, we think the governance issues are significant, and we think that, really, Tesla has put a new target out there, or not new, but relatively new target of targeting profitability in Q3 and 4, and we think the way they're going to achieve that is ZEV credits. And I think the problem with that is, while some may see that as a positive, I think the bulk of people see that as a big negative, because that's temporary in nature. It may not exist for Tesla next year.
Gordon, we've talked about the cash burn multiple times. I want to talk a little bit about the competition. Bloomberg New Energy Finance putting out their latest report on electric vehicles and saying the following: battery-powered vehicles comprised just 1.1% of new U.S. car sales last year. That's poised for change after automakers announced at least 60 more EV models for release between now and 2022, with GM and VW promising the most. I just wonder, Gordon, how important the competition story is now, and whether Tesla is running out of time.
I mean, we think it's extremely important, and that's a great point. I mean, if you look at, again, we go back to this point, but I think it's an important one. If you look at what Tesla was projecting for 1H17 Model S and X growth, it was 66% year-over-year at the midpoint. The number actually came in at just 6%, and for the year, Model S and X growth were up just 3%. And most importantly, in 1Q of 18, Model S and X growth were down 13% year-over-year. The problem is, last year you had one car that fits this category, 100% battery electric vehicle with over 200 miles of range. You have 4 of those cars coming this year, in the Jaguar I-Pace, Audi e-tron, Hyundai Kona, and Nissan Leaf. And then you have like 10 coming the next year, and between 2018 and 2022, we count 101 cars in total. So not only do you have the competition, right? If you add the Chevy Bolt, which that was the car that had, the only car that in 2017 had 200 miles of range and was 100% BEV. If you add the Chevy Bolt sales in 1H17 to Tesla's numbers, their 6% year-over-year growth jumps to almost 50% year-over-year. So even though that's not in the same range, i.e. the Chevy Bolt versus the S and X, it clearly, we believe, took share. So you have big competition coming, but not only does that hurt them from a competitive standpoint, but it limits their ability to sell ZEV credits. These credits that basically generate 100% gross margins. So there's another risk there that we think people may be missing.